Welcome to Willow Oak Asset Management's Value Hour. This is our special Berkshire Hathaway edition. My name is Steven Kiel, and with me today we have Geoff Gannon and Andrew Kuhn from Focus Compounding. How are you?
Good. How are you doing?
Doing great.
Great to talk with you today. And why don't we go ahead and start out, and love to hear about your takeaways from the meeting.
Well, my big takeaways were it was the best meeting that I've seen in a very long time because, the questions were very quick and they were, you didn't get a lot of commentary from people coming up and kind of grandstanding or whatever, so they're very on point that way. And I think that Buffett's pretty, I might be reading in my bias a little bit, but I think that he's pretty short-term bearish or short-term. There's a lot of possibilities that could happen. He's not as certain about the short term, but long term, very bullish on America still. And I think that his whole preamble thing that he did was a lot to try to kind of inoculate himself against the argument that he's, too negative and stuff, is to make sure that people understand that in the long run, he's very positive on America.
Yeah, I would agree with you. And biggest takeaway, at his age, he's still incredibly sharp. He still has incredible stamina, right? Sat there, and that preamble that he gave at the beginning, that monologue was very long. At one point, I liked it. He actually checked his watch, and then a couple of minutes later, he's like, "Oh, that went a little longer than I thought it was going to." But yeah, I would agree with you. I don't get the impression that he is, bullish, and I did think that he sort of prefaced everything he said, just to always bet on America, to sort of, like you said, I guess, protect himself from that. Another thing that was a big takeaway for me was really humility. When he was talking about airlines, he was like, normally we would not talk about this, but pretty much I'll talk all about it. And he referenced airlines a lot, I felt, during the whole presentation. But he was very humble, and I didn't get the impression though that he was incredibly bullish on in the short term, which I thought was pretty interesting.
Yeah, and when you look, our greatest advantage is a long-term perspective, and as investors, value investors, bottom-up fundamental investors, that's where we can always have an advantage. We're not worried about the next quarter or two, but in this environment, it might be a little bit different because of all the uncertainty, and Buffett referenced that uncertainty. And it seems to have some sort of an effect here on some of their stock purchases and sales. They had very small purchases in April that Buffett did not even know what the purchases were. What's your view on whether this is a time period you can play uncertainty or not, or is it something where we just wait and see?
Well, he definitely seemed to wait and see, and actually, we've done basically the same thing. If they showed our March and April purchases and sales, it would look very similar. And the only thing we sold was a stock, which, while not an airline stock, was an airline point stock, airline miles, which is also strange for us, just like Buffett, that he rarely, takes big positions and sells out of them so quickly. We, in a matter of months, went from buying something to just getting out of it. And like him, we're really surprised by how much volume there was. Well, not a big, well, we don't manage a lot of money. It was a lot of money compared to the market cap of that stock, to trade in like a matter of days. And I did not expect to get out nearly as fast as we did. And he was surprised by that with airlines too. And honestly, I don't know, they were probably around the same time, maybe a little bit earlier that we were selling them than him then, but very, very similar and same sort of industry.
Yeah, it's quite amazing that he was able to blow out of that position so quickly that it's basically completely gone in April. He had some sales in March, which I think was to get below to the 10% level, but that goes to this idea. He originally said he wanted a $20 billion buffer. Now they have 137 billion in cash. What's that buffer like now, and how does that affect buybacks?
Yeah, that's the thing that I think shocked most people, is that they didn't buy back a lot of stock, and that he flat out said that, so the stock at the time he was talking, I guess maybe, I don't know, was down close to 20%, not quite, or something, where he could have bought back. And he basically said effectively that Berkshire's probably worth about 20% less the intrinsic value than it was when they were last buying back stock in a meaningful way. So he said it's not a lot, it's not a lot less attractive or a lot more attractive, but that the decline in the stock price basically matches in some way his views on intrinsic value. And I think surprised some people, but that's honestly true for a lot of things that we own and that we look at. I'd say that we may have adjusted intrinsic value estimates by 20% in a lot of cases. Yeah.
Yeah, and then it's an analysis of how much the stock price has gone down then, It's sometimes you're selling some cheap things to buy even cheaper things in this type of environment. How have you guys been finding them just in terms of enjoyment, actually seeing a significant amount of, prices going up and down, potential things to analyze in these various companies that used to be predictable, now might not be. There might be some special situation opportunities. How are you finding your days now? Is it more fun than before?
Yeah, well, I definitely, he brought up the date March 23rd a lot.
Yeah.
And definitely going into that, basically there was a few weeks there where things were very dramatic. And there were definitely some interesting things just in terms of how much some prices were moving versus other things. And even if the overall market doesn't get cheap or doesn't get that expensive or whatever, isn't as important as the volatility of the individual stocks, which gives the opportunities. And so we were definitely seeing a lot of things with dramatic volatility there. I mean, we did a podcast where we talked a little bit about leaps one time on a stock, and some people were concerned that the price was too high given the volatility over the next year and a half. And by the end of the week, it had moved more than they thought it wouldn't move in a year and a half. So the volatility that was being priced into the option apparently wasn't enough.
Yeah, it's again, there's that old saying, some years are whatever the equivalent of months, and some months are the equivalent of years, essentially. The other interesting thing here, so we had no Charlie Munger, right? We had Greg Abel there. We had no Ajit Jain, but that's a little bit more understandable. Probably not safe for Munger to travel. It all made sense. The explanations made sense. But, Greg Abel's there. I think Todd Combs is local as well, and he was not on the stage. And so, yeah, how was Greg? How was it missing Charlie?
Yeah, what did you think about that, Andrew?
Yeah, I mean, I definitely missed having Charlie's wittiness there. I thought it would have been actually perfect to, like, that was like the perfect environment I felt for Charlie to kind of give his 2 cents and be kind of unfiltered. So I was really looking forward to that. I was definitely very disappointed to hear, but of course I get why he wasn't there. But it was funny, like when Buffett was doing was speaking in the beginning, at one point I'm like, is Greg there? Like, Greg, you there? Has anyone checked on Greg? But it was good. And it was nice to hear Greg speak as well and see how like familiar he is with everything. And I was pretty impressed. I've never heard him speak before. Maybe, I don't know if you have, but I definitely missed Mr. Munger there. But I think it was actually one of the best meetings in a very long time. And not to like say this, but there wasn't a lot of what advice would you give your children, or which is all amazing stuff. But he's been saying the same stuff for a long time. And since we're in truly unprecedented times recently and everything that's happened, I just thought it was awesome that it was all like investment focused.
Yeah, we heard a lot more about the energy business as well, which is something I think in past years they don't we don't hear as much, and maybe because Greg was there, but there were comments about having 30 to 40 billion dollars of reinvestment opportunities though over the next 5 to 7 years or so. I wonder if that plays any kind of part in making sure they have that cash balance. And there's a transition from Buffett made the point, the transition from a get rich kind of stock to a stay rich kind of stock. That's what Berkshire and a company has turned into. What do you think about Berkshire as an investment at this price and with these kind of comments?
I think it didn't seem to me much cheaper than it was last year. However, some people were talking, there was a question about like the performance over the last 15 years versus the S&P. And I think it was a lot more expensive versus the S&P 15 years ago than it is now. And they didn't mention that as an excuse for part of the reason why the performance hasn't been as good. But you started with a less attractive price than you have now versus the S&P. But you can see that because they were buying back stock before. They're buying back, and they hadn't done that in the past. I think that to analyze the stock, it really depends on, you have insurance, Berkshire Hathaway Energy, and the railroad. And then you would just have the positions that are held in the common stock portfolio. And the way I look at it, the common stock portfolio is basically in the long run just supported by float and so freight. And the insurance can be analyzed on the basis of whether they'll have an underwriting profit or loss. The other two are fairly easy to analyze. I mean, they're pretty comparable companies and things you can compare them to, with the railroad and the energy company. So they're actually really well positioned overall for this virus and for a recession. I mean, insurance, energy, and regulated utilities and the railroad are just not in the long run affected that much by these things. Now, their smaller businesses are harmed a lot, but they're really small, the ones that are really badly affected. So, you know, they're in a really strong position, and the stock is pretty reasonably priced versus what it's been for a lot of time in the past. Although I did own the stock in very early 2009, and it was really cheap then. So like March 2009 or something, I bought it. And it's nowhere near like those sorts of levels.
Yeah, and I mean, they were buying back shares at 226 a B share just earlier this year, and he said in the meeting that you know it's probably about the same, or not as cheap even now as it was kind of back then, even though they're paying significantly higher prices given all the changes. You know, Andrew, you mentioned Munger and his witticisms and that type of thing. It's irreplaceable. He did have an interview about a week ago though, where he made some interesting comments. That was referred to. These comments were referred to at the meeting as well. Any thoughts on Munger's interview from the week before?
Yeah, I think a lot of stuff what he said aligned well with what Buffett was, conveying to individuals. So they seem to be on the same page there. And if you think about Buffett, I mean, at one point they were talking to Greg, and Greg said, I think they own a business that owns 90 other businesses. So if you think about the economic data and factors and reports that Buffett can pull on what's really going on in the present moment in the world, I mean, he's like there, So I just thought it was very interesting. They haven't obviously purchased, stock. So it doesn't surprise me from what he was saying, given like the nature of their business and how they're so much in the know. So it's very interesting. I thought it was incredibly interesting.
What do you make of the airline sales and his, you talked about his ability to change direction very quickly, given the environment and, whether he admitted he made a mistake or not, or whether the idea that, he's commented before about never wanting to invest in airline again. He does that the last few years and reverses course again here. And he might need some sort of more permanent tattoo or something to make sure that he doesn't do it again. Yeah. But what do you think about that industry though, and some of the ancillary businesses around that, whether it be precision cast parts that they own, or whether it even be Boeing or Rolls-Royce, that provides engines to these. How are you viewing those comments?
Well, I thought those were the most bearish comments he made at all. Actually, they somewhat match up some things I'm concerned about, which is so he talked about industries that were hit, and he mentioned things like theme parks and hotels and things. But the difference with airlines and also he mentioned retail space and commercial space. So just like in this example where we live around Dallas, job growth was 4 or 5% a year for a while. And so probably the projects that they have in line for both commercial space and for apartments and maybe to some extent retail even, was planning on, the city being 10% or so more demand for that stuff in 2 years, because they're probably looking at least 2 years. And those won't stop overnight. The orders that were made for planes won't stop overnight. It's somewhat true in the cruise industry, but they weren't as growing as fast and as used to as fast growth as you had in airlines. So the thing that really stood out to me is when he said that the issue isn't just how quickly people get back on planes and all that, but with the load factors he was talking about, he said you're going to have too many planes, because the real question for Boeing and for Precision Cast Parts and everyone else downstream is that it's when will you actually need new planes? How many will you need, and when? And you don't want an oversupply of those planes. And that's the thing about the airline stuff that worries me the most is it's an industry with significant barriers to exit. No one's going to take planes out permanently. And so it's very different. And it really was, if you look worldwide, expecting that it was going to be growing, 5 to 6% in terms of the miles traveled, like as far as the eye could see. That's what airports and things were always telling you. And that's changed really fast for at least probably a few years to at least get back on the trajectory that they had before. So that's oversupply.
He did make a comment too that he doesn't think people are gonna be so quick to flying.
Well, I can understand that because, like, say, like me, for instance, if I felt safe to fly health-wise, well, the airlines that I'd want to go on are going to make me wear a mask and stuff. And so with other people wearing masks and things, it's a totally different experience. I mean, we'll see what it is, but it's a very different experience. I was thinking about that with cruise lines. Even people who feel safe and would book something, when they saw that cruise lines weren't being allowed to dock, if they're worried at all that that would ever happen again while they were on a ship, that makes them very reluctant.
Yeah, creates a big speed bump, and and you have to respect that Buffett has more information than anyone else across that industry because of their own operating. He sees the daily sales figures, he sees the some of the thoughts from those first line, frontline operators of the suppliers, and also NetJets and flight safety. He sees more data than anyone else sees, and he can probably distill it and interpret it in a way better than anyone else as well. So it does make you humble in that thing. There were a couple comments to make it a little bit lighter. A couple comments about pot for the first time that I've ever heard him say in terms of decision making. You think that was a dig at Elon?
Yeah, I had a couple of jokes lined up that I refrained from. It's not just about me anymore. I have to think about Jeff's reputation as well. So I had a couple of drafts drawn up that I wanted to send out, and I put my mature hat on and I didn't send it out. But yeah, I thought it was interesting because at one point I was like, okay, the first time I was like, okay, he just talked about pot. And then another one came about 10 minutes later. I was like, wow, he just referenced pot twice. And then I had a tweet lined up. If the third one was coming in, it was going to be like comedic timing's everything, and it didn't come. So
Well,
yeah, could have been.
Yeah, Elon and Charlie had a little bit of a spat a few years ago. They seem to have smoothed it over a little bit, but
What do you call him, a wise ass or something like that? Or
yeah, and Elon was in the news last week, and Buffett and Munger certainly talk. I think they probably might have had a chuckle, whether he intended to say it or not, or it just slipped out because it was in his subconscious. It was funny to hear the reference for the first time.
Totally.
Yeah, so last question here, I guess, for you. Any other major thoughts or takeaways from the meeting that you might apply going forward? Anything that you learned or observations that might be interesting to share?
I think the most interesting thing he said was he kind of referred to it a few times that he thinks in a range of possibilities. And so what he wasn't seemed to be saying, whether it was about inflation or about whatever, is that the economic effects of the virus is like there could be further shutdowns or not, but the range of possibilities has now changed such that there could be some very serious things for some of the companies we might invest in. That might be why he's not buying them. He also, I think that range of possibilities thing had to do with, he mentioned the option value of money as part of the idea of why you might hold cash. And so I really think that that's a powerful way of thinking for people, and that it isn't necessarily that he has one idea about this is my, this is the base case and the projection, and that's how he buys stocks or something. But if things have shifted so that he never thought that airlines would be in danger of insolvency or something, and now he thinks, well, now they might be, or he thinks about his insurance things or whatever. What if we don't have so much access to credit in 6 months? He's not predicting that will happen, but he's saying the possibility of it happening is a lot higher than it was in most of these previous years. And so he just thinks over that entire range, and I think that's a really useful way of thinking about it, and an important way of interpreting his thoughts. Like, he's not giving you one prediction about what's going to happen, but I think even his whole preamble thing was a warning about that in the long run everything will be okay. But he did really make that interesting point about when he was born, people didn't think they were in a depression, but they were in a depression. They'd already been down, they'd been a crash, and then they'd been up 20% or something, and they didn't know what the future would be. And it could have been like it was in the past, but it also could have been something they'd never seen before. And I think he just thinks that range is so much wider.
I also think, going back to like the humility part, did you think it was interesting? He did mention, he's like, we don't ever trim or like reduce or anything like that. It's as soon as he realizes that they make a mistake, it's like they close the book, they're out.
Yeah, and he said made a mistake. He said it's an understandable mistake, but other people would say that wasn't a mistake, that was random, luck or bad luck or whatever. But he does say that. He just says we made a mistake and moves on. He doesn't say necessarily we shouldn't have done that given the odds that we knew at the time.
Yeah.
But he just says, I made the mistake, and then he gets out of it completely.
Yeah, but he always, you know, preaches like being a business analyst. And I think he was truly thinking about it like as a business analyst as opposed to like a portfolio manager. Like a portfolio manager could be like, oh, how am I going to hedge this risk away? Is there anything I could do? Should I, you know, whatever. But him, it was just out, done.
Well, the thing that was really interesting is he said, like he did a little thought experiment there on the stage where he said, if we owned an airline, I don't know what we would do, because we wouldn't fund them through billions, millions of dollars of losses. So, you know, and then you can understand that the government's bailing out some of these things, but if Berkshire owned 100%, people would say, well, Berkshire has $100 billion in cash. That's their responsibility to bail that subsidiary out, you know?
It's a good point.
Yeah.
And you could tell too that I think he's completely written off the industry, because he was kind of praising the CEOs, be like, they've all done great jobs, you know, they've blah, 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 but you know, you just can't make money in airlines. Seems
yeah,
like.
and you know, he's made those comments in the past that if you have a poor industry and no matter how great the CEO is, and you want the opposite of that, right? You want a great industry where any idiot can run it. I mean, that's what he said in the past as well. Well, I appreciate these comments. It's great to have you on. This is always fun talking to you, hearing about your thoughts for the Berkshire meeting. Thanks again. We look forward to hearing from you again.
Thanks so much, Steve.
Great, thanks.